This just in from the U.S. Fish and Wildlife Service. The newest member of the endangered species list is the Facebook bear. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Earnings Palooza rolls on as more than 50 companies in the S&P 500 reported today. The Dow Index getting dragged down once again by Caterpillar. Joining me in studio, David Hanson and Jason Moser. Guys, Facebook, our top story. Yes, the Facebook bears are in hiding after the social network reported blowout earnings. Second quarter revenue and profit both came in much higher than expected, with mobile ads making up 41% of all ad revenue. Pretty amazing when you consider a year ago, mobile ads pretty much didn't exist for them.
Right, and so I think that's kind of the both sides of this coin thing that we have to play here, because while on the one side, yes, they did bring home the bacon where mobile ad revenue is concerned, we also have to remember that next quarter is going to be really a tough comparable where this is concerned, because the third quarter of last year is where this revenue really started peaking. But all in all, yeah, it was definitely a good quarter for Facebook. It's what they needed to do. And in playing this expectations game, and you know how that works with Wall Street, they beat on sales, they beat on earnings per share, things are looking up. I mean, it was a good quarter, you have to admit.
What is next for this company? Because to Jason's point, just doing even more revenue on the mobile side maybe isn't going to cut it.
I think what's next is we don't know. That's what you're betting on. If you're buying Facebook at these levels, at this valuation, you're betting on Mark Zuckerberg and team, that they innovate, that they continue to monetize those mobile users, those desktop users. So if you're buying today, this is a stock that you need to hold for a long term, 5-10 years, and really have trust in that management team.
I was going to say, plenty of people are buying today, and you look at the way the stock popped today. What's the case here? Or is this a situation where the valuation is still just a little too lofty?
I think the valuation is too lofty. Today's buying action didn't really help that. I think Dave made a great point here. It's a company that if you're going to buy this stock, you need to plan on holding it for 5 to 10 years. There's a lot of talk about optionality. The thing that concerns me about Facebook with being just an ad play is I feel like the ad play detracts from the user experience. And we didn't really get any clarity as to what they're going to do to help monetize that Instagram model. Unfortunately, I think that's going to also depend on advertising, which will also detract from the user experience. So the bet today is what they may do in the future. A lot of optionality there. Today's buying action, to me, I don't know that I would be jumping in on this optimism. I would probably wait. I think it's going to pull back a little bit. If you want to hold Facebook for a little while, that's fine, but there are going to be better levels to get in than today.
All right, let's get to some of the day's movers and shakers. Shares of Visa hitting a new all-time high after third quarter earnings came in higher than expected. The company also announced a new share buyback program of $1.5 billion. All-time high. That's great if you're a shareholder, but if you're not, is it too expensive?
I got news for you. Visa's been at a lot of all-time highs. I mean, this company's been public for just a couple of years. If you go back and look, it's basically been a straight shot up. If you're looking for a time that this has been dirt cheap, there hasn't been a time. And they just continue to execute on that toll booth model of payments and facilitating that network and collecting the fees in between. And I saw some interesting numbers that pointed to the economy as a whole getting a little bit better. Just quarter over quarter for Visa, payment volume in the U.S. was up 8%. So I thought that was encouraging just for the economy as a whole, Visa as a company. So I think it looks expensive, but I think you could go wrong in a lot of other places other than Visa.
Under Armour also hitting a new all-time high. Second quarter profit more than doubled, and the company raised sales guidance. How worried are you if you're Nike?
Chris, is it coincidental that I've got the same flops on today that I had on yesterday?
I'm sure that did it for them.
No, look, I mean, this was a phenomenal quarter. I mean, I don't know that we expected any less. Beat on earnings, beat on sales. They guided up. Margins are up. Inventory's under control. I continue to believe that Kevin Plank is developing a brand for the next generation here. It's playing out that way. And I think that investors who are looking to buy into a company that they can hold for the next 5, 10, 15, even 20 years, Under Armour is a great look at no matter the price.
General Motors' second quarter profit was better than expected. The automaker still lost money in Europe, but a lot less than a year ago. Stock's had a great past 12 months. What do you make of it?
Great past 12 months, but the story is still the turnaround story. And I think the selling that we're seeing today, the stock didn't shoot up or anything on these earnings. I think it was short-term investors getting out because the turnaround's just not quite there yet. I think there's still a lot of positive trends going for GM and just the car industry as a whole here in North America. So I'm encouraged long term. I think they have a very strong balance sheet. It's strengthening. I think there's some trends in their favor. So the stock was down today, but I saw it as a pretty positive quarter.
And finally, Crocs' second quarter was a record for the company, but profits fell 43% and shares got hammered. Good on the revenue side, but man, this has really been a roller coaster stock for the last couple of years.
So you mean a record, not in the good way?
Yeah.
Okay.
The revenue was a record, but the profits just got hammered.
You know, I look at Crocs. It's one of those conundrums. It's one of those conundrums because I look at in my house, for example. I've got 2 daughters. Crocs all over the place. So I wonder if maybe they don't make their product too well because they never wear out, right? And so when you grow up and you stop growing, I mean, there's no really reason you don't go replace the shoes. I don't know. I mean, Crocs to me, I like the product, but really when you see that they have to resort to these fire sales to get that inventory out the door, sales are down, earnings are down, guidance is down, inventory is a problem, margins are down. I mean, this is a big problem. It's like the opposite of Under Armour here. I like the product, but yeah, I just don't know that the company, I don't know that it represents that great of an investment opportunity.
All right, that is going to do it for today's action. Let's look ahead. David, what's the stock you've got on your radar?
Skipping over the weekend, going to Monday, there's a company called American Capital Agency that's reporting second quarter earnings on Monday. And this is a company that invests in mortgage-backed securities that are backed by Freddie and Fannie. So backed by all of us as taxpayers. So these are securities that they don't have to worry about them defaulting, but there's interest rate risk to these securities. So they're fixed income securities. When interest rates go up, the prices and the value of these securities go down. Obviously, in the second quarter, there was something called tapering, or the talk of tapering going on. I'm not sure if you heard of that. And that riled the interest rate market a little bit. So interest rates spiked up a little bit. So it'll be interesting to see where does American Capital Agency, where do they go from here? How much does that portfolio get hit?
If there is any kind of a bloodbath on Monday, is there a ripple effect? And if so, what's a stock to watch?
I think a competitor, Annaly Capital Management, might be a better stock to watch. If there is a broad sell-off in this sector, the sector has large dividends. That's why it gets a lot of investors' attention. I think Annaly's a better run company. They have a longer history, a better management team in my opinion. So I think Annaly would be the one to watch.
All right, Jason, what about you?
Yeah, I mean, it's an investment many love to hate. You know, Amazon, you can't get over how much money Jeff Bezos spends to build and grow out this business, but he's really latched on to something pretty cool here. It's just one of those self-funding growth stories. And so, you know, pay attention to top-line revenue. Their earnings coming out tomorrow, or coming out today after market close, but I do think you pay attention to the top-line revenue growth, looking at shipping as a percentage of revenue, get an idea of how that prime relationship is working out. And then also, we don't get a lot of information on Amazon Web Services, but anything we can glean from that earnings call, pay attention to that as well. But it's a fascinating company. I own shares personally, and I still think it's one of the biggest trends in e-commerce to play for the next decade.
All right, for Jason Moser and David Hanson, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interests in the stocks they talk about, and the Motley Fool may have formal